Everyone, this is an update on the SIL and SILJ silver miner ETFs, the first of which is the Global X Silver Miners ETF, SIL, and SILJ, which is the ETF MG Prime Junior Silver Miners ETF. And lately, we've had quite a swoon in the equities and the crypto space, but we're seeing a lot of activity in commodities, with metals being no exception. Obviously, oil and energy are looking pretty strong. And we may have ourselves a bit of a situation here, possibly a setup to the upside in not just silver, but maybe gold, copper, possibly even uranium. So we're gonna jump right into it. This is the 30-minute short-term chart for SIL. And when we look at this, in our last update, we had what looked like it could have been a micro 1-2. And then we had a spike up that hit the 1.0 extension, actually exceeded it. And then we pulled back. And now we're in some kind of a choppy looking rally. The same holds true for SILJ. Although in SILJ, it looks a bit cleaner. We had our low point on January 28th. And to my eyes, this looks like some kind of a fourth wave consolidation with potentially a higher high to come to give us 5 up. So if we look at it this way, we have about a 38.2% retrace. And ideally, we get to about the $16 mark, maybe a little higher, to give us something that looks more convincingly like 5 up. In SIL, it doesn't look as clean because, well, it could be an ABC. To my eyes, this one looks like possibly a 1, 2, 3, 4, 5. We may already have a leading diagonal up. And if that is the case, we already have ourselves possibly a second wave in place. So if we put our fib extension tool there, we've hit just about a 61.8% retrace, and we're rallying up from there. And right now, we haven't quite exceeded our high of about 39.39 that we hit on March 8th, but we're getting very close. So I had this concept called a pivot that I went over in the uranium complex. And basically, once you presumably have 5 up and a second wave down, you want to be able to go through the 0.618 and the 0.764 extension region. And that is significant because it ensures, or at least it gives us a very high confidence look or a confirmation that we are no longer within the first wave, that we are actually in the third wave up. So once again, if this is the first wave top and we have a second wave down, once we punch through there, that gives us a very good sign that whatever this formation was is over. So that would give us a much better indication that we are already in our third wave up. And I know our nomenclature's moved around a little bit, so I'm going to move these things over a little bit. But presumably, we're going to get our first wave up here somewhere, and maybe we have a bigger wave 2 down. This will look more clear on the big picture chart. So once we break through that pivot region and we don't break back down through the 0.618, which is 39.77, that will ensure, well, at least give us a strong, confident, give us confidence that we are in our third wave up. For SILJ, the same would hold. So we are, again, very likely in a fourth wave consolidation. It's very sideways. So once we get to 1618, we'd like to see us get from about that 1618 mark. So assuming we have about a 61.8% retrace, we have to get well past 16, probably well into the $17 range before we can call that a legitimate third wave start. So that is the small picture for the 2 ETFs. Looking at silver, which is the underlying commodity here, things are actually looking pretty decent. So we may already have a 5-wave rally in place. And when I back up, a couple of ways to interpret it. There is a double bottom. We had a bottom on September 29th, which is a long time ago, and then another one on December 15th. And since then, we have what is probably going to be best identified as a corrective rally up, because you have a zigzag up, possibly an A wave, B wave down. And this looks convincing like a C wave. You even have a fourth wave kink possibly in there, something like that. The other potential is that this could already be 5 up, or it could be 3 up, with us being in a 4, and we're about to finish a 5th wave rally. So there's nothing high confidence yet, but there's definitely some recognizable structures when you look at the short-term picture. Now, this is silver, big term, long-term picture, logarithmic chart, daily chart, and really not much has changed on the big chart. I'm still calling this a third wave top. However, there is an alternate possibility that this is actually a 5th wave top, and we're actually in a larger degree second wave. Either way, we would find ourselves in a rally into this box, whether this is the 5th wave finish or it's a smaller degree first wave of a larger third wave. It remains to be seen what exactly we have, multiple interpretations. The same holds true for the miners as well, but you can see that there's a prominent rally. We had our low back again on September 29th, and you could call it 3 up. It could be a 1, 2, 3. That could have been a 4th wave bounce, final 5th wave of the C wave, and this could be 3 up so far. It could be the start of a diagonal. Lots of interpretations, but it looks like we are primed for a rally. So I'm looking for a bit more of a rally before I deploy anything going long. I did get into a short, long-term SLV position, and that's dated pretty far out, but it's a very small position. I'm not particularly confident about the setup. So shifting over the miners, this is again Global X Silver Miners ETF. This is SIL, and the picture is again just pretty much the same as before. We may already have a first wave up in this particular security, second wave in place, and if we can break through that pivot zone about $39 to $41 on the logarithmic chart, might not be that might be an opportunity to go long, because while we have a standard expectation that we get into that $40, $50, $60 range, we could blow right past that target. That is SIL, SILJ, the junior silver miners ETF. As I mentioned, it does look to me like we're in a 4th wave consolidation. I'd like us to go a little higher to give us a more clear 5-wave impulse up. And here it's interesting because we didn't really have a double bottom. We had our lowest low on January 28th. So that could give us some confidence that in SIL, when we looked at that double bottom, or I'm sorry, in silver, when we looked at that double bottom, that secondary bottom may have been the actual bottom, with possibly this being some kind of a truncated structure to the downside. So back to SILJ, I would like us to get to that $16, $17 mark, maybe a little higher because it is commodities, and then pull back in some kind of a second wave before we're ready to rally somewhere towards that box. So that box does fall between $25 and $30. Those would likely be, well, let me put it this way, that would either be the top of the 5th wave of this larger structure, or possibly the top of the 1st wave of a much larger 3rd wave. We won't know until we see how the 3rd wave behaves. If we start blasting right through that box, there's a chance that we are in a much larger move. That could be a larger degree 3rd wave. So if you're looking to load up on options, a couple of entry points, I'll have plenty of updates on that because I do intend to play something in silver, possibly in gold as well. I'm actually eyeing something in energy. USO might have a setup, maybe even XLE, maybe a different video series on that. But I personally am opting to wait a little bit. I'm not going to go too aggressive just yet. But if I see some kind of a breakout taking place, I'll definitely have some structure set up, possibly some options on options, no pun intended. And it is, again, high risk, high reward. One of those things, one of the things about commodities is that they do have very high extensions. They blast through. So there's no reason to rush in once the rally starts. Even if we have a nice spike, a couple of 5-6% days, it's not too late to get in because there's so much upside ahead if we really are in the next leg of the rally. So plenty of excitement ahead. We're going to see how this correlates with the market, because I do sense that we are at some kind of inflection point in the cryptos and the equities. So how that may affect metals, not sure, but sometimes the major inflection points do line up with one another. So if you haven't subscribed yet, don't forget to do so. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.